Hello and welcome back to the Real Estate Unlimited podcast. My name's Sierra Steinmetz.
Brian Schuby.
Carrie Steele.
Bill Jones.
And we're the Jones Home Team.
And this is episode 73. We're going to get right into, Carrie's got a fun one talking about, is it fun, right? Weather, cold, something.
Pets.
We're not sure. Shuby's going to kick us off, though, getting into all the fun stuff with, credit?
Yeah.
We're making fun of more Gen Z people again.
Maybe not so
Maybe
much.
not. I'm probably gonna have to apologize to the Gen Z people from last week.
right.
That's pretty hard.
Yeah.
But because I'm talking about housing affordability.
Yeah.
But I don't know if I'm probably not gonna apologize, but I might. I'll think about it. Sierra, flood insurance. So what? I guess I didn't even know that was set to expire. Apparently,
I didn't either.
All right, I guess it's a thing. It's a thing. So, and then I wanted to, of course, talk about my favorite topic: Compass and Zillow badgering each other. And what did we decide? They didn't win the war. They won a battle. They won a battle, not the war though. So all right, Shub, you're kicking us off, dude. What are we getting into? Credit.
Yeah.
Right?
So I was on a continuing education last Thursday. And a mortgage broker was the one putting it on. So I thought it was kind of interesting. And then I also followed up with one of our local lenders just to ask him as well. So the mortgage industry is really feeling the pain from skyrocketing credit reporting costs, so much that brokers say it's hitting a breaking point. Brokers are reporting the tri-merge credit report fees are now exceeding $300 per pull in 2026. This is a steep climb from just 5 years ago, roughly. It was $30 or $40.
Which that's crazy. So I guess
That's
just
insane.
so for the listening audience then too, because that would be something you're getting a loan. The lender's going to pull your credit to see what your credit looks like then. They went all three. And yeah, I think it used to be $30.
Yep, $30.
So it's
and
$300
now? Up to
now?
$300.
That's
insane.
insane.
That can fluctuate a little bit depending on if the lender eats some of the cost or not. I know he did say that. But yeah, roughly about $300 per pull. I want to say last year he said it was about $200. So just from last year to this year, it went up $300 or it went up $100.
That's why. And so again, some more perspective than too. So anybody looking to buy a house, refi, or whatever, if they're going through that process, that's the lender. Maybe they need to eat that or have the person pay that. So it's not. So literally, if 1 out of 10 people, 1 out of 5 people buy a home that get their credit pulled, that's 5 out of 4 of the people that. Now $300.
Yep.
Someone's got to pay for.
Like, does somebody put that on their credit card up front, like they do like an appraisal, or is it like?
Which I didn't get clarification, but I'm pretty sure if it's a husband and wife applying for joint, they have to pull it twice because it's for each individual.
Oh, geez, really?
I mean, that kind of makes sense. Yeah.
I mean, that makes sense, but that's insane.
But it could be beneficial because my credit could be like 600, Bobby's could be 800. So then it could be like, wow, we'll go with Bobby's instead of mine.
Like for
$600 in cost right up front.
I mean, that's an appraisal. Barely.
It is, yeah. I think it's stupid. But
appraisals used to be $250, $300. Now they're $70, $100.
Yeah.
So
you think they're doing that cost, like the raising it to kind of stop some of the predatory lending from happening when they're pulling credit when they're not?
I think
like,
from
from
the article as well as from talking with the other lender and the Mortgage Broker Association, from like I said from the article, they're pretty much saying that the tri-merge credit report is an oligarchy because they have to pull the credit.
Yeah.
They're the only, there's nowhere else you can go.
Yeah, they keep all of that.
Yeah, they keep all that info. They're the ones who run it. So they could technically charge whatever they want
That's
because
so
it needs
stupid.
to be done.
It's just such a money grab.
And it should be free. Like, why? Number one.
Right.
Don't even.
Maybe a small like transactional fee for
the time to put it together.
Right.
That's what you should be paying for. The time to put it together. The time for that lender to sit behind their desk and get that information.
That's basically another inspection, cost.
So I guess to kind of go against that, so the mortgage bankers, I guess it's the Mortgage Bankers Associations have stepped in with proposals, including reducing the number of credit scores required. So instead of needing 3, maybe just need 1, potentially to just 1 for strong borrowers. So because obviously a lender can do a soft pull, which can kind of give them a general idea. And if you have higher credit, they're suggesting, hey, if it's above a certain range, let's only require 1 instead of needing all 3 to kind of cut some of that cost down.
Right. And those have gone up too. I think that soft pulls used to be like pennies or $1 or $2. And I think those went up to like 10 or 15 bucks.
I think they're 10 or 20 bucks,
Yeah.
I think is what the lender said in continuing that it was on.
So tri-merge, I had to look again. Experian, Equifax, and TransUnion. So I can understand they have costs. They need to, if they're keeping all that data, there's got to be some cost involved. But that seems, especially with data and AI and stuff
I would
like
say
that.
that's the word right there, data.
And how often these credit pulls are
cost.
happening all over.
Right. Sorry, we're all over you, Brian.
Who knew we'd get so fired up about credit?
You talked about my topic.
I know.
We're just gonna sit here quietly
pissed about this,
I
and
know,
now
right?
I'm pissed off about it.
I know.
So, like I just said, the NBA is trying to call for a single credit reporting system. So what they're kind of proposing is, like we just said, so if you're above a certain threshold, like you have a 700 credit score, only needing one, or I guess if you're a specific type of loan, only needing one type of, or I guess one score to kind of show that, that would obviously lower costs for both lenders and home buyers, encourage competition among the credit bureaus. So that would kind of, again, cause a little bit of competition. Mm-hmm. So maybe the TransUnion would try to, go lower than Equifax or something like that to kind of offset.
Which that competition would drive prices down for sure. Yep. So, then too, the reason for the 3, because they take the middle one usually then, because they all kind of look at credit differently. So if Equifax is one and TransUnion has another one, and I forget the other one already, but they'll go with the middle number then. So if they all have 3, if it's 750, 725, and 775, they'll take, okay, your credit's 750 then. Mm-hmm. But if someone's an 8, like, as I'll just brag, I got 800 plus credit score, it's probably going to be still close to 800 on all 3 of them. Why do they need to pull all 3?
Exactly.
So, yeah.
Which, again, that would obviously encourage competition among the credit bureaus, streamline the mortgage process, and bring mortgage credit reporting in line with other lending markets like auto loans that already use single reports. MBA leaders argue that the tri-merge requirement is outdated and flawed. So GSEs like Fannie and Freddie don't even use all 3. They only typically use all 3 scores for the underwriting decision. So they typically only use 1 or 2. And then that would reduce required reports, wouldn't meaningfully increase risk in many cases. So the pros of a single credit reporting, obviously it would lower costs for borrowers, more competition and transparency, faster and simpler process, and it would obviously modernize an old system. Now, I think a lot of people do have some cons with those. Obviously, it gives a less complete credit visibility. So, if somebody is right on that brink, or there are some some large variations between them. Maybe you don't get that whole credit picture. So, I guess it would make it a little easier for people to get loans that maybe shouldn't.
Right.
But I feel
that's what I'm thinking. I'm thinking somebody that maybe filed bankruptcy recently, and everything else is cherry, but because of the timing of that bankruptcy or something, all 3 credits are gonna vary tremendously.
Potential access issues for some borrowers. If one bureau's file is incomplete or outdated, borrowers with uneven histories could be unfairly disadvantaged or incorrectly priced. I think that's kind of what you were talking about. And
that's, again, it's important, I think, to keep on your credit. I haven't pulled mine in quite a while, but you can do that annual, I forget what it is. There's some website.
Yeah, because you could pull it for free once a year or whatever.
I don't think it gives you your score, but you can
should
still
have a pretty
see
good, I mean, I think most
there.
consumers have a pretty good idea about where they're at without having to pull it,
Sure. Yeah, because any credit card anymore, I feel like, has a free credit score thing, or most of them.
I was going to say, I know I even have, I think it's Experian. I have an Experian account. I can see mine for free. It shows me the number and everything.
Right.
So,
and I'll talk to the lenders, like what the credit card company's showing you versus like that tri-merge poll is always different.
Right.
So I thought it was just crazy because the other thing with that, so from talking with the local lender here, so just something to keep in mind. So if the way he said he typically does it is he does a soft pull. Once he gets a contract, he has to do that hard pull because they need the hard pull before they can submit the file to underwriting.
Sure, and that makes sense.
However, if you're in contract, so you do your hard pull, you're in contract, and you fall out of contract, the report that they pull is only good for 4 months. So if you don't go back under contract for 4 more, you wait 4 months to look again, you have to have your credit pulled again. So you're paying that fee again after 120 days.
That's why, and then your credit's probably getting dinged again. That's probably a hard pull on your credit twice.
Yeah, it is. That's what I'm saying. So you're paying that fee, let alone now you're getting dinged on your credit twice.
Right.
Yeah, and it used to not be that big of a deal because you could find a house within that 4 months, but now if it's 6 months or 2 years,
Because also I know, and I've heard, I think we all probably heard this, that I think, what is it? If you have your credit pulled by a lender within 30 days, you could have it pulled multiple times. So that lender that I was on that continuing education with, he said that he has seen where they have got dinged multiple times, even though they've had their credit pulled within 30 days. So he's like, I always tell my people, you will hear that and see that, But I'm telling you, it does not actually work like that. They will
So
ding
still
your
dings your
credit.
credit
They will
again.
ding your
Multiple
credit.
times.
And then when you're trying to lock in your rate and you've dropped 40 points or something, that's going to really put a boot in your tail.
Especially if you're close. You know, if your credit's close from being
Right.
able to get a loan and not get a loan. Obviously, if you have your credit pulled multiple times, that's...
And you're trying to like do everything you can to bring it up to get that best rate.
Yep.
Yeah.
Ugh. All right.
So just some more fees for borrowers to keep an eye on.
Yeah, I just feel like there's an exception to every rule. Like if they can move towards just using the one bureau, but then if you've got someone where it might be a little bit on the fence, then okay, that's unfortunate that they're gonna have to pay maybe a little bit more for that credit pull, or the lender is whoever's paying for it, so that they can verify the best option for that buyer or whatever, to be able to get them to buy the home. Then I feel like sometimes it's going to happen, but it doesn't have to happen every time. When you have someone that's 800 plus or something like that, or has consistently been at 750 for how long, you know?
And you could know your credit score, but then keeping an eye on it when it is something like that. You know, I just said, most everybody probably knows their credit score. Cool. But if you're pulling it 3, 4, 5 times,
right,
you know, or you financed a vehicle a year ago and now you're doing hard and soft pulls for a house, it could change dramatically in that time frame. Like,
yeah, kind of going to your point, Sierra, I think that's the more risky a borrower is, probably the more they're going to have to look at that, which means it's more expensive, which stinks for them. But I guess if you're a riskier credit score, there's more risk involved. So yeah, you're going to pay more, unfortunately.
But usually in life, when you do get a raise or something happens, you're doing a lot of transactions within a small, you know, like, within a year and a half, I have, you know, moved, bought a car, financed a vacation, whatever, because you know you're set up for success in this new job or this new life or this marriage or whatever it is. And so it's real easy for that number to kind of roller coaster.
You might, but from a credit standpoint, you might look like a risk then, just because you had all this stuff going on.
For sure.
So I guess just for buyers, I mean, if you're someone that's going to have to be very diligent on what your cost at the end of the day at closing is going to be and trying to minimize fees and whatnot, I guess just that's another thing to keep an eye on, is if figuring out, and I think I might just use this as my topic next week, but figuring out what loan type you're going to qualify for at a certain credit score or whatever, and if you're going to be close to on the fence, kind of paying attention to that, or if you're able to wait a little longer, get your credit up a little bit higher and stuff like that. So
it's worth at least talking to your lender about then too. That's one more thing to just bring up. What am I looking at expenses? And yeah, that's obviously a much bigger expense than what it once was.
Right.
So.
Right.
Well, who would have thought credit's so interesting? So you good, Jube?
Yep.
All right. Carrie, what are we doing? It's still cold. We're filming this. It's still February. It's
winter
terrible.
Pet safety. And I was thinking of that too, because I came up with this topic a couple of weeks ago and it was so bad out. I mean, we were trying to shovel paths to our little dog's legs were like shorter than the snow. And I was like, winter pet safety is a good one. And then, you know, now it's 40 some degrees in the daytime. But
I guess I don't watch the weather like my wife does. Like, has it been cold everywhere? Because I know here it's been miserable for weeks and weeks and weeks. But I don't know if
I saw
like the entire United States had snow or something.
I had an inspection on last Friday, and the inspector is also licensed in South Carolina, and he showed me a picture of somebody he's friends with down there, and they were doing snow angels in Myrtle Beach.
Wow.
Isn't that wild?
Jeez.
So, and some of those places don't even have heat. You know, they're set up for tropical locations, so they might just have a space heater. So we'll talk a little bit about. So winter pet safety and what homeowners need to know. So tying this into real estate, winter, it's not just for people, it's also for our pets. And some of the things that we need to pay attention to is the toxic household products that we have in our house that can affect our pets and how that also affects our home. So when you have a really nasty winter, you're going to be using products like antifreeze and salt for your antifreeze separately from the salt, obviously.
I don't know if there's a combo use for that. Maybe someone
no
missing
combo,
out on.
Comma, pause, period, whatever. And so those can be very toxic to pets. So when you think about maybe storing your dog in the garage, or like what are some things that your pet can get into that maybe you didn't think about, kind of like thinking about childproofing your garage for your pet, if that makes sense. But ice melt is pretty dangerous. Some of it can be very dangerous for pets. And you know, they go outside, they put their paws and everything, they come back in, they're licking their paws, or they're cleaning themselves and ingesting
I guess I never
that
even
stuff
thought about that.
unintentionally.
Yeah.
You know, they're bringing those toxins into your home. So the same way they're in the garage or the same way they're outside, they're bringing that stuff back in. So be mindful of the product that you're using. They do make some pet safe salt for your steps. And that stuff is also good for like if you have a sandstone sidewalk, just thinking about not just the pets, but also the maintenance of your home. Because if you're constantly throwing that salt down, it's going to eat into your sidewalks and your concrete and all that stuff. So kind of a dual purpose there. And then also, you could probably go on YouTube and find any kind of slip ups but if you're walking your dog or you're taking your dog outside and your steps are slippery or the deck is icy or freeze fog or whatever, you see a lot of those bloopers where people have the dog on the leash.
Those are like my favorite things ever.
Just, yeah, like the door.
And they just get yanked into the yard or whatever. Yes, those are amazing.
And then also keeping it safe for your delivery drivers too, which is our thing. Mud rooms. So when those dogs or those pets go outside and come back in, not only is that salt that you're putting down eating into your sidewalk, your concrete, all that stuff, or your deck, your paint, but when it comes back in and it's getting into your wood floors, your laminate floors, your tile floors, keeping that cleaned up, because that can also cause discoloration and disturb, especially if you have like a high maintenance laminate floor where it's not waterproof. You're really asking for a disaster there with salt and water coming in, because what it'll do is it'll get down inside those cracks and it'll cause it to swell. It'll expand and then it'll kind of look like a rotted floor.
Yeah, especially
I'm not speaking from experience, but
yeah,
I've seen it.
That's never happened in my house.
We talked about the antifreeze and de-icers, but also rodent control and cleaning products. So if you're bringing your pets into the garage when it's extremely cold outside, or if they're not commonly in the garage, let's talk about it that way. Those can be really bad for pets, especially if you improperly store stuff. So if you're just throwing it in there really quickly and you don't think much about it, and then your pet's in there for 24 hours during a cold snap, and then you're dealing with, maybe a dead pet because they got into something they shouldn't have.
That's horrifying. Yeah.
I mean, it is, but you don't think about it.
Right.
You just think it's super
cold. I'm trying
cold.
to help my pet, keep them inside.
Keep my pet inside, keep them warm. Don't let my pipes freeze. You're going through all the steps, and you can't obviously be everywhere at every time, but those are just some things. And also kids. I mean, kids too.
I didn't think about locking my kids in the garage when I'll try that next winter.
More so the stuff that they can get into the garage. And basements too, because people usually bring their pets in. And it's funny because I saw a skunk. It was like negative 20 degrees, and I saw this skunk, and it was like running for its life, and it was Antarctica outside. It was so cold. And like the like pet lover and me was like, I just wish I could get that skunk and get it in where it's warm.
Oh my gosh.
Oh my gosh, I know.
Or like coons. Like I just felt so
place,
bad for all of them.
We never ever had any issues with animals crawling under the front porch because it sits this far off the ground.
Yeah.
Well, like 2 weeks ago when it was frigid,
so bad.
A skunk decided to dig under and like was staying under there. So
you almost want to be like, it's okay.
Did you start feeding them then?
Right. Okay, I didn't feed anything, but
yeah, I felt bad for him, but also go away.
So
go somewhere else.
You
shoot one over to Tom's house.
Right.
Yeah. I have a link to Amazon if you want to share that. So one way that you can keep your pets safe is depending upon where you're storing your pets, where you're placing your pets during a really hot snap or a really cold snap. They have these, like I call them bulk thermometers, but they're very inexpensive. You can get them for your freezer or your refrigerator. And with babies and strollers, I never realized how hot it got inside a baby stroller with a blanket over top of it. Because we were taught, if the sun's out, drape a blanket over top of your baby and keep the sun out of its eyes. But it wasn't until I was watching the news and they put a little thermostat or thermometer inside with the baby, and you pull that thing off and the baby's just sweating profusely. I'm like, oh, sorry, baby.
Let's get
you some air. Kind of the same way with pets. You might think you're doing them a service by bringing them in the garage out of the heat, but if that door's shut and there's no circulation, that's a safety hazard too. So it's not just the cold, but also the heat. But if you get these thermostats, you can place them like in your dog's doghouse to see if the insulation that you have in there, maybe you have a hunting dog or something, to see what the internal temperature is getting down to. And you can do that also with some other animals, like if you have chickens or ducks or whatever.
Sure.
Because I'm sure that even with it being 28 to 40 degrees outside, the temperature and the air temperature has got to be a lot colder, and the same with the nightfall. So you kind of have to be mindful of what's a safe temperature for your pets. We actually, not my dog, but a very close family member's dog froze to death outside. And you don't think that, they've got a dog house, they've got everything they need.
Sure.
But what's the safe temperature for your pet? So I don't know that answer. I should probably Google
just
it.
because I know because we have a bunny in the garage, their water, like their water dishes and stuff, freeze all the time, or their little bottles, and you got to watch for that stuff. So
I did see a little tip for outdoor pet water, and it's to put a milk jug covered in black. So maybe you paint the inside of the milk jug or somehow paint it black where it's safe, and then stick it down in the water, and then it draws the heat to that and melts so that it keeps like a fresh water.
Outside kind of thing.
Outside, yeah.
Wouldn't do anything
I don't think
then,
it'd work for the money
yeah.
inside, but you just have to keep going outside there with your hairdryer.
Right, yeah, and then take care of that.
So that was just a bunch of rambling, but I think it's important that, you know, if you are going to be a pet parent, that you're a responsible pet parent. And then also, not only do you love your pet, but you love your home. So you want to make sure that whatever maintenance you're doing preventative for the cold and your pet, that it's also, you know, helping the inside too. So your pets come in, they're bringing all that salt and snow and everything in the mud room. You're taking a towel, you're wiping their paws, you're cleaning up all of the floor. And, you know, just maintaining your home, especially
so take care of your
during
pets, take care of your house. Yeah.
And especially if you've got your house listed for sale, because those things are going to, you know, obviously people understand that you have pets and you have a life and it's gross outside, but they don't have to bring all that inside with them either. So
same thing in your car. Make sure, like, hot or cold, you know, if you have a pet in the car, which I would never in a million years leave my dogs in my car. It would be destroyed, I'm sure, by the time I got back then. But yeah, making sure that's so my car has a temperature keep thing. So it's called dog mode. So if you get out of it, I promise, you flip it to dog mode and it keeps the temperature, like whatever you have it set at. And then on the screen real big, it says, my owner will return shortly. The temperature is this. And it says that real big.
Nice.
So anytime the kids stay in there, I always turn it to dog mode. And I'm like, be a good boy as I get out. And they're like, Dad, stop it. So because then it says I've done it to Kelly too. It says my owner will return.
That's so funny.
That's funny.
So.
But then that way, no one's thinking that you're a terrible person.
Yeah, break the window open, thinking my dog's in there getting killed.
Yeah.
So now my dog's more comfortable than you are right now.
Yeah,
so.
no kidding.
But yeah, kids don't like that, FYI.
I'm sure your wife does.
I know, right?
Yeah, I'm like, hon, your owner will return shortly. It's fine.
Your owner will return shortly.
I'd be driving the car home. You'd have to find a ride.
All right, what are we into? Sierra flood
insurance. The National Flood Insurance Program, NFIP, it's a government-funded flood insurance program, and it is set to expire in September. Backstory: the funding for this has been extended prior many times, but we currently have until September. I think it's end of September, maybe, for it to be extended for the 2027 fiscal year. And if not, I'm going to talk about what happens if it doesn't, yada, yada. So,
it looks like through September deadline to pass through 2027. So some of this is like another government shutdown thing. Like they just have to refund it or reissue it just to make sure it's.
But the NFIP has nearly 4.6 million flood insurance policies, which is almost $1.3 trillion in coverage, with over 22,700 communities in 56 states and jurisdictions participating.
I thought we only had 50 states.
I know, 56 states
and
jurisdictions.
Yeah.
I gotta listen.
So, like I said, it's been extended numerous times, and we've got till about close to the end of the year to figure what's going on with that. So NAR, I pulled this article from NAR's website. They're pushing toward the longest extension possible for this, while Congress works out a more long-term solution, because this has kind of just been an ongoing like extension after extension. And at a certain point, either you kind of got to figure out something long-term, or you might lose the funding altogether. So in the case that the funding does not get renewed, the NFIP cannot issue new or renewal flood insurance policies until the program is reauthorized. Existing policies would remain in effect until their expiration date, including a 30-day grace period, where claims would continue to be paid as long as FEMA has the funds. Quick note, private flood insurance is not affected by this at all. I know a good chunk of the time, I feel like around here, it's usually more private flood insurance that people get. But if you are through the NFIP, then that would be affected if this does not get reauthorized. So just something to keep an eye on. Like I said, all current policies would continue to be seen through their expiration, but no new policies could be made or policies renewed. So those people, if this was not reauthorized, would have to find a new insurance carrier then for their flood insurance. So if you are someone that has flood through NFIP, that's just definitely something to keep an eye on in case it's not renewed. And the NAR has said that they're pushing towards doing everything they can to get at least a long-term extension. Well,
I feel way better now. NAR's on the case. We're in good shape, I guess. So. But we'll link these up here then too if you really want to, because the one has a ton of links and tons of stuff. I'm sure you could put yourself to sleep pretty fast figuring that all out. But I guess to most consumers, they just want to make sure that they have coverage.
Yeah.
And then that's been a minute since I've done I don't the FEMA-backed ones or the private ones. One's always significantly more than the other. I don't remember which one it was. We don't live in a flood zone necessarily, so we don't do a lot of those. But I know at one point with the one up by the lake we did, one was significantly cheaper. They were able to grandfather one in versus shopping a new policy. And I don't remember if it was private or backed by this, but I think it was backed by this, so it probably was cheaper with that.
It was cheaper.
Yeah. Which makes sense, I guess, with the private policies. They've got to back that with some type of,
some funding.
Yeah, some funding then. All right. So we're good for a little while, right?
Yeah, got a little bit longer, but if it doesn't get reauthorized, definitely.
I feel like they always work it out at the last minute.
Right. So. Which is unfortunate for people that do have
29th
programs with
at
them.
11:59
Right.
Yeah. Not knowing if they need to switch or what.
Well, it always turns into just some left-right issue. Like they're always trying to bludgeon their pet
Something
project
else.
in. I want to get something out of this before I approve it then. So
Yeah.
But I don't, is flood insurance a left or right issue? I think it's
like
just,
it shouldn't be.
You wouldn't, I'm sure it is. I would like to know if you're Democrat or Republican, what side you're on for flood? What's big flood insurance?
Oh my gosh, do not open up that debate.
We'll Google that right now.
I do not care. If
No,
you
me
need flood
either.
insurance, you need it.
Right. All right. Cool.
But yeah, that's what I got. Just keep an eye on that.
All right,
Maybe
sweet.
have an update whenever they figure something out or if they don't.
Okay. Well, I got 2 or 3 things. I don't have time for all of this here then too, but good news is, home buyer affordability has improved this year. So Brian's a cheater. He's not allowed to guess on this one here then too, but I'll give you guys a chance to guess. So they must be talking about 2026 already here. Inman article. So the median home sales price nationally is what? What do you guys think it is? So median middle home sales price.
$500,000.
Geez.
Oh,
I was gonna say like 4 to 450.
somebody just.
Brian,
bought
do you want to
one.
guess?
I think it's
$26,747.
Oh my gosh, that's amazing.
You're so
Yes,
smart.
to the penny. Yes, you've
To the
got it.
penny.
Yes, exactly. So so I'll start with this.
I just realized you blacked it out.
Yeah, I did. I was trying to put it on a separate sheet, and I was trying to redact it, and of course he cheated and looked at it then too before we even started. So I was going to offer a prize, but since you're a cheater, you're not getting anything.
I don't think.
Hey, I think
Had
I
I
should
not-
not get a prize.
But had I not somewhat seen, I don't think I would have been that high. I probably would have thought it was like high 3s.
Right, and that's where I probably
my
would have
head,
been too. Yeah,
like
probably.
a
I was thinking like 3
3,
1/4 or something like
yeah.
that, but I don't know. Well, I guess I don't know
$3.75?
what the actual.
Yeah, what are they?
So that's a median, but I guess what's the average? I don't know what
Right,
the average is. I didn't
average.
look for that then either. So I don't know. I'm going to decide whether I'm going to apologize to the Gen Z or not. It was really hard on the last time then. So if the median home sales price is $426,000, that's a lot. That seems for our
that's
market.
crazy.
For some markets, that's nothing. That's like a starter teardown home. But our market, that is a very nice home. Like
Yeah.
you're buying a baller house around here. So.
I love baller.
Baller,
I mean, you do, right? I mean, nice. You can get a very nice home for that. So, buyers now need to earn exactly $111,252 to afford that home, which from a year ago is $115,000. So it's a 4% drop from what it was. So
Can we also note that that's still a 6-figure salary?
Yeah.
well, so yeah, that's what I'm getting at. So yeah, if you depend upon what headline you're reading, it's like, oh my gosh, I can make 4% less now and afford a medium price home. No, you're still needing to earn 6 figures to buy this medium price home. Again, if you're earning 6 figures in our market, you're buying what do I call it, baller? We'll say a very nice home, buying a nice place anyway. So. Mortgage rate's still sitting around 6.1% compared to the 7% this time last year, which again, too, we were promised, we're going to be in the 5s, low 4 or high 4s at this point then too by so many people that we're nowhere really close to that. Even with all the rate cuts, it's only come down.
It's up, right?
It's come up. Yeah.
6
Yeah, it was like 6.2
something. Yeah.
Yeah, so even with those rates, again, we've talked about that in the past. They're not directly correlated, but they're not getting anywhere. So that's bringing the median monthly payment down to $2,675 from $2,800. So again, median mortgage monthly payment from $2,800 to about $2,700.
God, I just feel so poor right now.
Right? Yeah. Like where do you budget that? And then.
So
what if you need an oil change?
It's like watching the iced coffee hour. Like you save so much, that's worth $1 million. That $5 a day, something like. But how many coffees do you not have to drink to afford $2,800 a month? That's a lot of coffee. Yeah,
only the difference between what it was and where it is now.
so I'm leaning towards I was a little too hard on the Gen Zs, but I'm still not there yet. I don't know. But in that market, you probably have a lot more opportunity. Here, 6-figure income's pretty good money. Maybe in some of these markets, that's nothing. You're working at McDonald's and making, which again, nothing against working at McDonald's, but maybe they have to pay you 6 figures there. So again, headline, 37 out of the 50th biggest metros see an improved in affordability. Dallas leading the way. They dropped nearly 7.4%. But you only need 112,000 there, so not you're still needing pretty big money. Jacksonville dropped again. You're under 6 figures, but barely to buy the medium price home.
Thank God.
So is the bottom falling out or the market crashing? No, sellers still outnumber buyers in most markets, which means buyers are getting some of the best discounts we've seen. I'm sorry, sellers still, that doesn't make any sense. So sellers still outnumber the buyers, but I think pricing is still coming down some from there. So the gap is real. Typical American household. So this again, 6 figures to buy that median house, but the typical American household earns $86,185. So that's the entire house. So the math don't math. So if you're a typical Gen Z house, you're upside down about $25,000. So maybe.
So you're not getting an average house.
Right. Some of these other markets, some of the major metros have been up quite a bit. So coastal markets, San Francisco, San Jose, Los Angeles, those are all up there quite a bit. New York, obviously, things like that. So, these big things.
But do you remember when Jacksonville, you could get like a really baller house for $126,000? Jacksonville,
not anymore, apparently. So, again, we talked about this in the past. Congress looking to pass some of these housing acts, things like that. So good talking points for our clients and talking about, rates are coming down, but we've been talking about that forever. Are you waiting still? Are you not? Are you doing whatever? Because you still apparently need to earn 6 figures to buy just even a medium price home. So
I need to digest that one.
Yeah. So, all right. So to sum up, you need to make 6 figures, buy a medium price home. Depending upon your market, some of them are way higher than that. So that's median. So what's double that? $1 million. For the other end, you're $1 million plus for a lot of homes. So I don't know. Just move to Northwest Ohio. And you can afford,
girl.
You can afford a lot.
On.
Yeah. I don't know what you're
doing.
We
got baller houses.
We do. Lots of them. $400,000
by $250.
But I do. Like $300,000 is going to buy you like a really nice house here.
Absolutely.
Yeah.
So I don't know. Okay, I'll touch on this here real quick and we'll get over it here then. So judge denies Compass's request to stop Zillow's listing policy. So just real quick, if I can remember from memory, Compass is a 3-tiered marketing thing. It's doing their private listing on their private network, and then they move to a coming soon and then go into the MLS. And Zillow's like, absolutely not. If you're doing that, you're not making it available to the entire public, AKA it's not going on their Zillow website where they can then remarket to us agents to sell listings and get eyeballs on those things. So they're not playing that. So Zillow says, you do that, you will never, that listing listed with that agent, that Compass agent will never show up on Zillow. So Compass then, of course, sues, says that's not fair. So Judge Jeanette Vargas denied Compass's request for a preliminary injunction to stop Zillow's listing policy. It's like we talked before. Yep, they won the battle, but not the war. So it's not a final judgment. The lawsuit continues. Basically, the judge is saying that injunction, wasn't enough. They weren't proving their case with that. So again, just to recap, Zillow's policy bans listings from its platform if they're not marketed publicly, within that 24-hour time frame, like that we all as agents have to do. If we're taking a listing, it's got to be on the market within 24 hours per, all the guidelines through the NAR, all the local boards, things like that.
And local agents who will call you out if you don't.
Oh, absolutely, for sure. As they should,
Drive by.
I guess. So, yep. So that ban lasts for the entire duration of the listing, not just temporarily. So we talked about this before in the past. It would be, my understanding would be from that agent with that company then. So if Bob, who's working, I'm just picking on Compass because the point of this is, so if Bob is a Compass agent, he does this private marketing thing, the entire time forever that home is listed with Bob it will never end up on Zillow. So that's their Compass's contention is like, well, that's not fair to my client, my agent, my everything else.
Well, neither's your secret society.
Right. Yeah. That's kind of what it is then. So Compass 3-phase marketing. I already talked about this. Started as a private exclusive, then it goes to coming soon, and then on to the MLS. So Zillow's policy was a direct response to the rise in private listing networks that were growing in popularity early last year. So it's not just Compass, there's other places. So there was the contention that Zillow's a monopoly. I don't know where I lost my note with that. It's basically saying that Zillow's a monopoly, so that's why these rules should apply to Zillow. They got to be fair to everybody or allow everybody on there. But the judge said there's other companies that are doing this or banning this. I think it was Redfin said they're also not going to put those listings on then too. So Judge, I forget her name here.
Judy?
Jeanette Vargas says, nope, that's a bad argument then. So I guess first round goes to Zillow. I'm sure they were both, I watched the Inman thing. They were both on the Inman stages, basically both saying they won, Compass and Zillow, both saying
okay, next
continue.
Week, hear me out. Rock'em Sock'em Robots. We're going to
Yes.
be right here
With
with
both of
Compass
them.
and Zillow.
So again, we've beat this to death here. Why does that matter to anybody? I don't know.
Because it's significant. Because if you're listing and you want your agent to get as many eyes on it as possible, and it's being held in contempt, basically.
Yeah.
It's like ransom.
Yeah.
Like you need a ransom.
Yeah.
Exactly. It's like it will be released to these places when it gets released to these places, and if it doesn't, I'm sorry, I did everything I can.
All right. And I'm sure there's a counter. I don't know what it is, but I know there's a counter argument to say that, hey, this is the best. So, Carrie, your house will be perfect for our 3-phase marketing program, private listing, to this, to this, to this. I'm sure there's an argument to say that works, but what that is, I don't know.
Well, yeah, I'm sure it's great to be able to work with agents in your office that you know personally on as many deals as possible, especially for the broker. But like in general, just as an agent, I obviously would prefer to be sitting across the room from one of you guys working on a deal than run the risk of working with an agent that doesn't answer their phone.
Not familiar
all
with.
those other agents. Boo.
Who's to say that someone in our office has the best buyer for your seller compared to literally every other agent, even in our small town?
I think they do. My understanding is those listings are still available. It's not like we're shut out of them, but you have to then go to their system. Like you can't just go to the MLS and look. You can't go to Zillow and look. You can go to Realtor.com and look. You have to go into their. So it's not like we're excluded from it. It's just a whole different thing you got to log. So if everybody's if we make our own thing and the next company makes their own thing and the next company makes their own thing, where is that information going? And now, hey, I want to look
going backwards.
I want to look at 123 Main Street. Well, who's it? What do our buyers say? They don't know. Who's it listed with? Who's the signing? I don't know.
But it is so annoying that Zillow puts whoever's name attached to it, and you get those phone calls and they're like, this listing that you've listed, and it's like not even your listing, or vice versa. Somebody else is getting your call because whoever's risen to the top of that advertisement
whoever's paying.
Attached.
Whoever's paying for
that. That they say they want it to be good for the consumer. That's not good for the consumer. I'm sorry. And it's not because I'm not dumping hundreds of thousands of dollars into it. It's like, I don't care if Sally Sue is selling a house. Sally Sue should have that listing. She should have her branding on that Zillow listing. I shouldn't be attached to it in any way, shape, or form. I'm sorry.
Their contention it's listed on there. You just have to scroll and open the little sidebar things.
And even as an agent, even us looking for it, like we know where to go find it. And a lot of times we're still digging to see who it is. Is it co-listed? Is there a team? Is there 5? Like, how do you find that exact person that you need to call quickly?
And it's just the same regular print as the rest of the listing. And you have to scroll all the way like towards the bottom. Yeah. I had one the other day that it was someone looking at a house in Nelsonville, which is like near like OU, like Athens area. And they called my cell and they swore that it was listed by an agent in our Findlay office.
And then they get mad when you have to correct them and say,
I was like, I'm so sorry.
I'm sorry, it's not our listing.
Not able to help
I'll help you. Like, I'll try to find the information for you, but like.
Yeah, but you're also 3 hours from me and I don't know.
And it's an $87,000 house.
Yeah, right.
And it's just
way
like
below
not
the
in our
median
MLS
price.
or anything. Yeah.
So, kind of end on that here. So, Compass's CEO, Robert Redfin, quoted Zillow internal document saying Zillow would, in quotes, punish the agent for choosing to put their listing on alternative networks, end quote.
Punish.
So, punish them. So, Zillow's saying they're going to punish him, and Robert apparently does not like that for his agents and his clients. So, which I can understand. I can get both sides of it. I can. But, so, yeah, I think it goes both ways, giving consumers more choices, but it's also, I think, giving them less choices at the same time to where, the buyers and sellers both. Buyers are having a harder time finding products, homes for sale, and then sellers, you don't know where your home's going to end up listing. And as of right now, it is not going on Zillow. If you're going on one of these private networks, you're not going on there. You're not going on Redfin, or I'm sure quite a few others. So they will gladly go on our website. Check our website out. They'll all be there.
We got you.
We'll put them all there. So I had another thing, but we'll leave that go then for now. So I don't know. What's the voting thing? What do we do? Should I apologize to Gen Z or not?
Oh.
Not pass or smash. What are we doing?
We're not smashing Gen Z.
What is it? It's something like that.
Listen, they're trying their best. I bet that the medium home price didn't require a 6-figure salary when you were their age.
No, and our parents though.
Yeah,
but my parents,
a copper and what are the old timey money of 10 coppers bought you
back in the 1900s. But I think though too, like we talked about this when my parents bought a house, like early 80s, the interest rate was so high, like they barely bought a house. And then when they did, it was staged with everything they could possibly get from garage sales or family or friends. Right. And I think we're at a time now where you're going to be house poor. If you want the house, you're going to be house poor, and you're just going to have to admit you either get what you want and be house poor, or you default to something that you can't afford that's ugly and make it your own.
Well, and that's the problem.
We're seeing more and more people making whatever it is their own.
Right. They want the use again the baller house, and they want it fully decked out. They want all new stuff. So they can't just be like, I got to get this. I got to start with a home. And
TikTokers are on Airbnb. Those aren't their houses.
Yeah, I'm
They're
eating off of a
shitty one-bedroom apartment eating ramen out of a cup.
Yeah, I'm eating dinner at my folding table forever. I mean, that's how I started. You know what I mean? That's literally how I started. Then just a bunch of junk furniture and a junk house, and you just kind of go from there. I just
told the story the other day. Like our starter home, we started. The back room was an unfinished laundry and breezeway that we turned into the master bedroom, and so we didn't have the attached suite, if you will, and we didn't have a closet. So we just had a square rectangle box. We came out the laundry room, through the kitchen, through the dining room to go to our one bath.
Yeah.
And the kids had to come down and down and around and around. And, now we have the luxury of walking from me to you to go to our bathroom. Right. But it wasn't through.
Now everyone needs their own private bathroom and
a little
master suite.
It didn't start that way.
All right, we'll quit railing on it then too. But Gen Z's, I'm not sorry. Work your butt off, get your credit up, save your money. I'm sorry you have to make 6 figures to buy a medium price home, but I mean.
But we didn't walk into our parents' house when we first bought either. So you just have to meet life where it is.
Same thing. All right, we'll end on that happy note. That is, I don't even remember what episode it is. 73 in the bag. We will see you back on 74. Thanks. We're recording.
Okay. Oh my God, I literally almost just said, take your mark, go.
You just do it.
Oh my God, I need swim to be over so bad.
That's almost
it's
over.
Like saying it in your sleep.
My brain.
That's hilarious.
Wow, okay.